Okay. Okay, great. Hi, everyone. Okay, so
Hello.
we have, yeah, if everyone can mute themselves, that would be great for this part and just in general until the end. Okay, so welcome to the R42 AlgoDynamix Markets or Mania monthly webinar. Today's September 30th. So today's agenda, as always, we'll have informal discussions with doctors of R42, Dr. Jeremy Sosabowski, who's a senior fellow at R42 and also founder and AlgoDynamix and CEO of AlgoDynamix, and then Professor Frank Sortino, senior fellow and advisor at R42, and Professor Ronjon Nag, the founder of R42. Today's topic is the never-ending increases in the stock market. When will they stop? So the hosts are Dr. Ronjon Nag, who is the founder of R42, he's serial entrepreneur and inventor, also adjunct professor in genetics at Stanford Medicine, and won multiple awards. And he's been working on AI for the last 40 years. And then myself, I'm a principal at R42, been there from day one and evaluating companies in AI and longevity. And Zishuan helps with, he's a venture associate, helps with fund management operations, and also R42 fellows mentoring. Okay, AlgoDynamix is a AI for trading company based in Cambridge, UK. R42, well, first of all, we're a venture fund. We write first checks. We also have a quant fund with AlgoDynamix, and we have currently over 100 deep science and technology investments across UK and US, but mostly US. And then we also have the R42 Institute, where we have the fellowship every summer for students and professionals working on various AI and longevity projects, founders program, and various workshops, events, online and offline. R42 comes from Hitchhiker's Guide to the Galaxy. And also, more recently, CapAI is a strategic commercialization partner of R42. So we build companies where there's R42 is venture-backed and CapAI is publicly listed companies. We also just launched R42 University. So we have courses in October upcoming. So venture-ready pitching, write a book in 30 days, yoga for aging, longevity science for skeptics. It's open to anyone and it's online, so check it out. Then we have the SALTS Symposium. Silicon Valley Applied Longevity Translation Symposium at Stanford Faculty Club in January. And then the first ever longevity retreat, a 2-day retreat at Ritz-Carlton in Half Moon Bay. It's actually almost full. And you'll have the unique thing about it is that you'll have a lot of tests included at cost or below. And then and intimate sessions with like seminars with renowned longevity speakers, healthy food, and various activities. So definitely check it out. And we'll send the links as well. And then we have Longevity Club as well. So it's monthly webinars just like this one, but focused on kind of like citizen science community where we test various products, discuss, and get good offers for various longevity products and tests. Okay, finally, so today's speaker is Professor Ronjon Nag, founder of R42, also executive board member of Kappa AI, which I just mentioned recently. And then Professor Frank Sortino, founder of the Pension Research Institute, emeritus professor at San Francisco State University. And he is very well known for invention of Sortino Ratio, which measures risk of stock portfolios. And then Dr. Jeremy Sosabowski, co-founder and CEO of AlgoDynamix, AI-based financial price forecasting analytics company based in Cambridge. Okay, and yeah, so today is, as always, it's an informal discussion. We will, you're welcome to discuss among yourselves in the chat as well during the discussion or ask questions. And then we'll end with live Q&A, or you can type it in the chat and we'll choose the questions. But we'll start with kind of like more informal discussions between the three professors, doctors here. So over to you.
Thank you, Anastasia. Thank you. Right. So the topic of today is the stock market goes to ever increasing highs. When will it stop? And I think me and Jeremy, we've been historically in these sessions, but fairly optimistic. Frank's been always been a little bit pessimistic, I think. He's in bonds. but I just looked at the market this morning, slightly down. Um, let's see. The I think the latest news is the government is going to shut down. I think it is going to shut down today. Maybe we'll have some last minute news on that. But maybe we'll start with Frank. Is it the reason the market hasn't moved much is because this has happened time and time again and it eventually gets resolved? Or is the market really overlooking it's just too optimistic. It's just too optimistic and any bad news is just put under the rug.
I remember when President Kennedy went on the air. There was no television at that time. I think that, and he said, "My father told me that all businessmen are SOBs, and now I know it to be true." And that was my first experience with a bear market. Market sold off for weeks because they thought that Kennedy was anti-business. Now, with that statement of his, no one at that time thought that he was anti-American. Uh, uh, and people were, freedom of speech was at a peak. People could say whatever they thought about the government and about government policies at that time. Now, it's different. And yet, no matter what Trump says or does, the market ignores it. It just goes up and up and up. It doesn't care. Well, I care, but I'll let Jeremy. Jeremy had something to say about that at a last podcast I was listening to about you know why do uh, why do people just ignore these things? What makes the market go up and down?
All right, Jeremy, you and I have been optimistic historically, and we've always said the market is underpricing the advances of AI and that's going to happen in the next 3, 4, 5 years, and actually maybe underpricing the market, and so we're there. But there's usually ups and
Mm,
downs. It seems to be just keeps going up and up and up, and despite the prospect of a government shutdown in the next 24
mm.
hours, it's hardly moved.
It's
You're
hardly moved.
Jeremy.
My 2 cents, actually, and I'll give you the international perspective. Um, from the outside, every time there's a US government shutdown, it's always the 11th hour, isn't it, Ronjon Frank? Always something happens at the 11th hour. So let's just park that away. I'm not going to comment on that. Slightly controversial. Um, in dollar terms, S&P's going up. In gold terms, or in euro terms, or in sterling terms, the US market is flat or negative. So I'm going to question the premise that the market's going up. I reckon it's actually flatlining in real terms. So that's my first opening statement. Second bit too is I'm once again I'm not overly concerned actually. Unfortunately, it's being transferred to the U.S. national debt, so I'm not expecting any hiccups. That's my sort of opening gambit. We're as is basically Ron Frank as is. I'm not saying it's good. I'm not saying it's perfect, but I'm not expecting anything drastic or dramatic on sort of weekly, monthly time scale. So that's my sort of opening gambit for today's discussion. So
Right, so that's interesting.
mm,
So if you're a GBP, a pound investor in the US stock market, you've lost money. Essentially.
flat.
Flat. The market's gone
Flat.
up, but the currency is also,
Mm,
20% difference. If you go on holiday, Americans going on holiday to Britain, it's not as much fun as it used to
it's more
be.
expensive. Yeah,
Right. So, uh, and then with respect to gold's also gone up. So that's also
enormously.
reflecting that. So if you uh, risk adjusted it, then it will be okay. Well, okay. Okay. Well, is it? It still keeps going up, right? So, is it go? When's it going to stop?
Well, we have some software for that, Ronjon. So obviously,
Actually, yes,
we do have some software for that. So yeah, it's called AlgoDynamix. So
what's
there we go.
AlgoDynamix telling us? When is it going to stop? Is it telling us
We have
it's going to stop?
up flags. We have up flags on gold. S&P has been flat basically. So it's I said nothing. I'm not seeing anything. I wish I could sort of make some grandiose statement about, oh my God, end of the world. It's not the case. Everyone on the call, it is what it is. It's gently sort of eking up. So I think, you know, it is what it is. I think I'm going to stop there on that specific topic. So,
All right.
Did either of you listen to Stephen Moran, the recent person put on the Federal Reserve Board by Trump? Did you have a chance to listen to him?
I'm overall comment, not specific on individuals actually, but monetary policy. And Frank, you've been around a bit longer actually. I think it's sort of the assumption is that the central bank is always independent from the short-term government, which is the case in most places. I hope that's maintained in the US because I think, you know, we want global fiscal policy and stability, and that assumes an independent central bank. So
I
I
think there
think
is
it's up.
a 90% chance that the Federal Reserve will belong to Trump within the year. Moran was put on by Trump. Now, unlike most of the people that he put in positions of power, Moran was really well qualified for the job. As a matter of fact, I think that he has better qualifications for the job than Powell. Powell was trained as an attorney. He had no economic background, but Moran, from undergraduate through to PhD, it was all about economics and monetary policy. So he's very well schooled for the job. Does he know what he's talking about? Do any of us know? We work in this world of uncertainty in finance that we have a lot of theories that we like to bring to the fore and say, well, this theory says that and so forth. Well, Moran says, and I agree with him, things are worse than they appear because all the people in economics are looking back at the last year and the last 2 years. And he says that will tell you nothing about the future. And he looks at the things that are happening now that are going to affect the future. All the layoffs at the, thousands of people being laid off, and they don't show up on the unemployment rolls yet. Many of them have been shipped off to other countries, so they'll never show up on the unemployment. So I think he's right that things are worse than they appear. But I also agree with him that recession is no longer the greatest fear. It's possible, but the greater fear is inflation. And the question is, if the Fed lowers interest rates over and over and over again, is that going to be inflationary? And I say, of course, everything that I learned in economics says money supply. It's money supply. How much money are you pumping into the economy? I don't know if that's still true. Maybe something else is operating, but that was the basis for Friedman's thought that the Federal Reserve should set the increase in the money supply at 3% and then resign their jobs. That you should just match supply with demand and the money supply. The idea of using the Fed to be responsible for jobs is ridiculous. That was an idea of a president. I think it was Nixon. What did Nixon know about jobs and the role of the Fed? It should have never been made a role of the Fed. The Fed is there to keep inflation from happening. That's it. That should be the one goal.
Right. So do I hear that actually this Moran he's actually more qualified? Do you actually a Trump appointee that you actually approve of, Frank?
Yes, I approve of it.
Okay, great. But Frank, when is it going to stop the increases of the stock market? Notwithstanding Jeremy, maybe yeah, Jeremy's comment that we're actually flat by other people,
The
but
next biggest move is going to be up. Last month, I said that I changed my views from being totally pessimistic and 100% in T-bills. I am now, and since then, I'm 20% in equities.
Oh, interesting, Frank. Okay, good. Thank
I
you. Thank
think
you.
that
Thank you.
equities are a hedge against inflation in the first stage. And
Okay.
so for the next year, we're going to have more money flowing into the economy. And that means the economy is going to look like it's going up. And the market will go up with it. And I want to be a part of that. Unfortunately, I think that the US market is not going to participate as well as Southeast Asia. And so my money is going into Southeast Asia.
Okay, so when we have inflation, typically, I mean, it's a sort of a fictitious numbers because companies charge higher prices for their products. That means their revenues go up, but inflation adjusted, the revenues are not up, but the prices go up. And often they can hide profits, right? They can actually, when I say hide profits, appear profitable, more profits, more because the numbers are just bigger. And so then stock prices go bigger. When revenues go up, stock prices get bigger. And so that if you look at the data historically in inflationary terms, stocks do go up, but they don't go up necessarily in to save you from inflation. So I think I think I'm probably in between you two. It's probably maybe still closer to Jeremy. I think that we still have technological exponential advantages in the um, next few years and also the next 20 years. The innovation cycles have been getting shorter and shorter and shorter. So, the first industrial revolution in the 1900s, maybe it's 30, 40 years. Then you have semiconductors, that's probably 30 years, 30, 40 years. Then you have PCs about 20 years. You have internet, it's like 15 years. Mobile at 12 years or so. And now we've got AI, which seems to be 2, 3 years cycle. I mean, it's a 50-year-old field, but now it seems to caught its way because we've got 1 billion people using it instead of 10 million people using it. So we've got 1 billion innovators, and it's actually accelerating the innovators. I do think the number of sort of jobs per se is going to decline because things will be done by machines, but we're going
Yes.
to have the number of companies increase. And we're going to end up, maybe it's like the 1600s, artisan economies, artisan businesses. In the olden days, maybe it's somebody baking cookies or sausage. I made some sausage rolls over the weekend, actually. So, because you can't get them here in the States, so I have to make my own. And so, goes to the farmer's market and it will puts up their shingle. That's going to increase the number of sort of entrepreneurial companies, and that might mean a dynamic economy, or it might mean, just as we found, in the 1600s, a the haves and have nots. The haves are people who work in big tech, and the have nots are the rest of us, right? I'm an optimist. I think people will be forced to be more creative, to start their own businesses, even if it's a coffee shop, and or even if it's baking bread or whatever, or sewing t-shirts. My wife Sally Ann is making t-shirts. She makes t-shirts. She teaches sewing, and sewing apparently is cool. The New York, as declared by the New York Times, sewing is back to being cool, or is cool, or maybe it's already being declared as being cool. And the jobs. We've got this new actress called Tilly Norwood. She's an actress, but she's an AI generated actress,
Interesting.
right? And so Hollywood is all up in arms about how to do that. But of course, at R42, we've been building movies entirely with AI. And if you play it forward, you'll be able to do a whole movie with no actors and maybe not even any directors either. It'll just spit it out. So that's the landscape. What time scale is that landscape? I think it's going to be quite short. No, I think in the next 18, 24 months. Um, so I think it's going to be quite short. So there's my 2 cents. Jeremy and Frank, do you have any input on my before we go to the because I know people are typing in, some people agree or disagree. But let's go to you two. What do you think about that scenario? And then going back to the question, when will it stop? I guess the question is in that scenario, it probably will have obviously downticks, but it probably will continue for the next couple of years. But go ahead, Jeremy. Sounds like you want to say something.
I wish I could find something to contradict or to argue here, actually, Ronjon. Yeah, I think fragmentation of more job creation at the micro level. But I'm not seeing. I can't see any counter argument of what you just said, actually, and AI taking over. So my only slight add-on is with my slightly biased background. I think quantum will be making appearance sooner rather than later. I think that's the only thing I want to add, basically.
That's where you and I differ.
I think we
think
differ on
it's
that
10
one.
years
Yeah.
away from being 10 years away. And actually,
I think we're in the
I'm
3 to 5
optimistic.
scales, but okay, fine. Let's keep disagreeing. And we've got something to disagree on. I think that's good, actually. So
I keep saying it's 20 years away, and I know you're a physicist, Jeremy.
right.
But my other physicist friends say I'm being optimistic when I say it's 20 years away.
You should visit Cambridge more often, Ronjon. Come on, come over again. Actually, I think
There
we're
are some
missing.
billion-dollar quantum companies in Cambridge, right?
There
Billion.
are actually, and it might be more of a UK story, actually, ironically or not. But we'll see how that pans out, actually. So that's
Well,
just
that's why we have you here, because Sleepy UK will start. Even the AI stuff, isn't it? A lot of it was done in the UK, but Sleepy UK, it does. It's just pottering away in these technologies and science subjects that no one bothers.
no one particularly pays attention until you end up
That's
with
why
ARM processors
that's
in
why
all the
we.
phones, right? Yeah.
Yes, but that's why I pay attention. Some people go to Britain to shop at Harrods, but I go to shop for startups.
As you should. Well done. Well done. Good.
Frank, what do you think about my?
I agree with both of you. Yes, AI is the future. I think that the current talk is about chips driving it and energy. And there's massive amount of money going into having data processing centers. And you are the expert in this, I think, Ronjon, not me. Is that true, or is it going to be products that use chips and products that use the energy that are going to be flooding the market and replacing jobs?
Good question. Bottom line, the latter, the products. If you look at the history of AI, time and time and time again, they make bigger models, more complicated structures. They use up more energy. And then someone comes along and says, oh, actually, I can do the same thing with 1/10 the computation, 1/10 the computing power, and that kind of like the DeepSeek moment was kind of like that a little bit. They just popped along. We starved them with the chips, and they did it anyway. And it turns out necessity is the mother of invention. And it doesn't, you don't have to be China. You could be two graduate students at Stanford or Cambridge or Birmingham, even where I went to, where I don't have all that computing. I don't work for Google. I don't work for Meta. I don't have unlimited compute. So I'm going to think more cleverly, right? And so I think the data centers, no, I think it's equivalent to the fiber optic boom in the
Yes.
2000s. I think that might be a bubble. That might stop. It will catch up again. Eventually we used it. We used the bandwidth, but I think that probably would be in dangerous territory. So there's a few
Yeah.
stocks in that area because, it's beholden to. I mean, the argument is even if you come up with more energy efficient systems and less computation systems, we'll still need more and more data center because there's now 2 billion people using it instead of 50 million people using it, just in a few companies and research labs and a few products. And of course, the other dynamic is the training costs more than the usage. Once you've got the training, then the usage is 1/100th of the computation. So we're beginning to get, right now, you know, we've got GPT-4, GPT-4.5, GPT-5, the training. There might be sort of a saturation point in the next couple of years where, you know, the incremental improvement is not as neat. But that's a pseudo controversial idea. There's sort of
I don't think it's controversial, actually, Ronjon. I think all the big players are pushing for more chips and more data center and more energy. But you're right. You know, that time disconnect. I think longer term, your fiber optic analogy is absolutely perfect. By the way, you know, so possibly too much capacity very soon, but a long term, we're probably underestimating the required capacity still, right? So there's a time disconnect between the two, but we'll see how that pans out. So
yes, yes. Okay. Any last thoughts before we go to the audience? Let's see. So okay, but yeah, okay. Well, we'll talk about wait till the end. Whether is it are we in a market or a mania later on? Once we've heard some clever thoughts from the audience, and maybe Anastasia, you can sort of start reading the chats and see which ones you like. Let's have a quick
there's some good comments.
Yeah, anyone wants to verbalize their question, put their hand up first.
Yes.
There's a comment about you opening a Greg's sausage shop in California, Ronjon. Is that a good business model? Having a food, it's a recurring SaaS model, isn't it? Food, it just
Well,
keeps.
Greg's has taken over Britain, isn't it? And it's in Piccadilly. It's in.
Is it every? Okay, I don't know. It was in central
London, yeah, it's in Piccadilly
Okay.
Square, whatever it is, and Circle Piccadilly Circle. And then yes, and we do have the R42 University, of course. That's yes, and the last person who that sounds like a silly idea or a ridiculous idea. You know, we're working on the accreditation, but we have Randeep's nicely said the last person who did that ended up in 1600 Pennsylvania Avenue. Actually, is that the most recent university? I'm not sure. It's a
Actually, there's another question from Randeep. Actually, does it feel like the run up in 1929? So the Roaring Twenties. I don't know. Are we in the Roaring Twenties? I think that's a very good question. No, we're not. Okay.
The 2000s. Those of us who are old enough can remember the internet boom. I mean,
that was the Roaring
the
Twenties.
Roaring 20. I mean, there were parties everywhere. Companies when they got funded would buy the most expensive office furniture.
We're not there. You're right, Ronjon.
Yeah, we're not there.
We're
Traffic, certainly in Silicon Valley, it's like letters from Silicon Valley. Traffic was bumper to bumper on the 101, and we're not there. We're not doing that. People, in fact, almost the opposite is sort of, you know, software engineers are coming demanding 1% of the company, like entry level software engineers demanding 1% of the company. And now it's the opposite. You know, entry level software engineers can't get jobs, and you know, many articles in that well-known business journal, the New York Times, not the Wall Street Journal, the New York Times, they'll put down offers that entry level software engineers can't get jobs. They can't get jobs at McDonald's. They don't have enough experience. And every university is building computer science buildings, gleaming ones, over the last 10 years. Stanford just built its one data science building just in time for people to say, well, I mean, it's kind of like economics. If computer science jobs are paying the highest salaries, then more people want to do get educated for that. And then there's a balancing effect. And this is a reflection to the H-1B visa issue, where, you know, I think that was applied to young engineers as opposed to PhD. I guess we all have PhDs. Maybe we're being snobbish, but as opposed to PhDs.
I'd like to bring up another point.
Yes.
If there are no questions coming up, let me throw something else out. The time that it takes to build a factory in America is probably going to be a lot longer than expected. Think about the high-speed rail that we started to build from San Francisco to Los Angeles that still hasn't been connected with the rails. It's going to take longer to build those factories, and it'll probably cost a lot more. What does America build that ever came in at the estimated price? It's always more, something more than that. And while we're doing this, there's the rest of the world. What about China. I see China as someone who gets things done
Mm.
much faster than we do. And while we're waiting to get through all the regulations to get the approval to get it, they'll have the product in our market.
Well, but maybe we'll learn as we get, the first few, I mean, China can build a factory overnight pretty much. We saw that in the pandemic, hospitals overnight. As we learn, maybe we'll get better at it. Maybe we'll just get better.
Mm.
At the moment, we're probably pretty slow in the US, but maybe we'll get better at it. A few hands up. Let's see. Jonathan, go ahead.
Couple of questions or comments on Ronjon. How are you going to square your application of AI with the fact that MIT says that 95% of AI products in the enterprise fail to have any ROI? I mean, the proof ultimately is in the pudding here. And so far, we haven't seen much of it. We have, even at OpenAI, a company valued at $500 billion that says never's made profit in its life. It and only 3% of their customers pay anything for their service. If you give me a prompt and I give it to ChatGPT, Gemini, maybe even Grok, I'm not sure that maybe you could understand which one was Grok, but you certainly wouldn't understand the other. So what's the differentiated product? So I want to understand how you're getting to a relatively quick overall economy-wide level impact for AI when we haven't seen it really take off. I mean, look, everybody's been using Google Maps for years. That is a form of AI, no doubt, and it has been enhancing. So yes, you see some stuff on the margins, but we certainly haven't seen it in total factor productivity, nor have we seen it on individual scale projects.
Excellent question, Jonathan. So, yes, my first AI system was 40 years ago at Cambridge, before Jeremy was there, actually. And as you say, OpenAI is losing $5 to $6 billion a year, and valued at $500 billion. And there's been about 600 billion invested in AI in the last year or two, and only 35 billion in revenues from applications. And so usually, so people are buying the chips and not getting all that money's gone to Nvidia pretty much. Nvidia and similar infrastructure companies, but of course, the people using the infrastructure need to make more money than the infrastructure costs. Otherwise, there's a mismatch. And you're right. There's a couple of reports, MIT and even at Stanford, and of course, I went to MIT. Of course, MIT probably single-handedly held the field back 10 years because of Marvin Minsky saying neural networks would never work. But it probably 15 years actually. But I think what people are still learning how to use these systems. I'm firmly in the camp that it's this artisan economy. Uh, I'm seeing a lot of pitches where people say they come in with three people and they say we would have needed 15 people to build this, and now we can just do two people. OpenAI, cloud. Most of us, I get emails all the time, a bit like the Theranos email I got 20 years ago, 30 years, 25 years ago, saying, "Would you like to buy OpenAI shares?" I think Jonathan's dropped off. His internet, I think, froze, so he might not be able to hear this, but the rest of us can hear this. And the, uh, the idea is that people are going to get used to using this. Like internet, we saw loads of companies losing money, Amazon in particular, losing money. And but the people who made the most money wasn't Cisco, it wasn't Sun Microsystems, it was the application players.
Mm.
Those people have not come about yet, but I teach a course on it. You can write now, there's something called vibe coding. Some of you have taken that course or taking it, where you can actually build something in a day or two. And the critique there is they're not scalable, they're not secure, but they're improving very, very rapidly to do things. Okay, Next.
Can I briefly
yes, go
comment
ahead.
on the enterprise thing, actually, Jonathan? My understanding from the study, actually, they looked at ROI within 6 to 9 months, which is it's a very short time period, especially at enterprise. So I'm slightly more, it's interesting numbers, maybe a bit longer, actually, maybe different. And, how about the artisan economy? How about the non-enterprise use cases? So I don't know, mixed views. I think that's what I'm saying about these specific studies. So I just wanted to throw that in.
Frank, any opinions on?
Yes, I think you said earlier that there's going to be job losses, and those job losses are going to go to AI products that take their place, and people will pay for that. So there comes the return on investment.
Right, okay. Sunil. He's on
Oh,
mute.
hi, Ron. Good morning, everyone. Thanks for giving me the opportunity to ask questions. So I just wanted to add a comment and add a question. So on the earlier H1B and the cost of rising, I think the labor cost. So as a H1B myself, formerly H1B, and I came in as a F1 student. And of course, the pathway is if you're not a PhD, like Ron mentioned, you got to take an H1 and work for a company and get sponsorship for immigration. But the times have changed since the last 25 years. I came, and of course, the job market has shifted with AI. So I think there's a kind of a mixed bag here that I don't see that there would be a need for more H1 visas given the shift with the AI industry and all that, where a lot of the AI applications that can get created on the fly with cursor, vibe coding, and all that. So having said that, that has obviously sprung up a lot of companies, right? A lot of startups coming in various sectors. But the deal flows, the question more I have is on the deal flow side. So the deal flow, especially, is the money is getting invested in the foundational LLMs, but is that going to happen in the application space, right? Where the actual applications get created and used by the end users or the customers. And how do you all, like Ron and others on the panel, see the deal flow? Is that still going to be stronger going forward into 2026?
Right. So the critique on a lot of these deal flow applications is sometimes like, well, these are just LLM wrappers, they're wrappers around OpenAI. I'm less critical on that concept. I think it might almost be that I think somebody put, yeah, Tom commented, you know, you know, cloud and if we look at history, we had something called Netscape years ago, and then you had the Google browser later on, and then you had and then eventually Netscape got folded into Sun Microsystems. I would not be surprised that one of these big LLMs get folded into one of the big tech companies, maybe more of them, and then the players applications. It's not that you know and Microsoft in particular is particularly good at having sort of an underlying layer and taking a toll gate of people who build things on top, on top of an operating system. Culturally, they've got that in their genes. So I think we see a lot of deal flow from applications. It's trying to get domain expertise plus the application, I think is the best match because as an investor, you're always thinking, well, can't OpenAI just do this, right? And they can, but things that are a bit messy, that's not going to be in their genes. They're going to be wanting to do things that apply to lots and lots of things. So there is, I think, investability in vertical applications that go on top of it, and the pot shot that people say, well, it's just a wrapper. But it's usually much more domain experience put in play. Let's see. Jeremy, do you have a comment on that?
Thank you.
No. Do we have our sort of killer app yet? Is it large language model search? What is our sort of eBay equivalent of the year 2000? Do we have one yet? I don't know in terms of, no, still jury's out there about what's the ultimate application layer for large language models. I don't know. I'm just throwing it out there.
Yeah, I think which will be yeah, I don't think killer app's out there yet. I think maybe vibe coding if you think it's an app. I mean, Lovable went from 0 to 90 million ARR in 9 months
Okay.
with 15 people.
Wow.
And I think they're up to 25 now or 30 or something like that. But it's yeah, exactly. Killer app, organic intelligence. Okay, yeah. I mean, talking about biological intelligence, the only existence proof of real intelligence is humans, and yet we don't run on silicon. So why are we banging our heads trying to make it run on silicon? Let's see. Let's get to some code. Randy, go ahead.
Hi, Ronjon. Hi, Jeremy.
Gotcha.
In the internet boom, surely there were two different kinds of booms. There was a high capex boom, which was the cable and the fiber companies, and there was a low capex but high customer acquisition boom, which was things like the Yahoos and Amazons, where the key point was people like Amazon, though it may have been high spend, it was for customers they could monetize over a long period of time, which was base their success. What we're switching to here or now is from a high customer acquisition boom to, in some ways, a high capex boom, more like the fiber or more like the railway boom of the 1840s. And that's why I'm wondering whether we're at risk of all this capex being stranded, because a bit like in the railway boom, we built multiple railway lines parallel to each other, and in the end, only one was necessary. In this case, once you've built your infrastructure, things like the GPUs, you've got to actually amortize them while they're still commercially viable. And 2 generations down, which could only be 3 years, they're no longer competitive, or you have to reduce your prices massively. The other day, I was hearing that in some AI data centers, maybe utilization is only 30 to 40%, and that's today. So I'd be interested in your thoughts on that.
Excellent. Frank, what do you think about this historical, move for infrastructure build versus customer build and the back and forth?
And just to be clear, we're not saying that Frank was around during the railway boom.
Well, I've been around for a few years, more than 75. I think that if I understood the question correctly, that to me it would be more like the computer. When I went to UC Berkeley, there was one computer and it was in the basement, and you had to have a deck of cards to go in there and feed into it. And by the time I got my PhD, everybody was getting laptops, and now then it went from laptops to cell phones. So I think that kind of acceleration could apply to AI and the uses of AI and how it's used. That the idea of these huge databases and energy centers could be replaced by. Didn't DeepSeek just come out with something a couple of days ago about a new model that they have that is even faster than like 10 times faster than the one that than their second one that came out?
Yeah, well, that's my prediction. Things are just getting, and if you and the guys who don't actually have the computing power are going to be more innovative. But I think I think the switch to applications, people are not spending as much money building it. They should then have more money to be able to get on spend on marketing, but actually don't need to spend as much as marketing because they'll be more targeted. The AI systems are more targeted. They can have agents. A number of companies and people are sort of just setting up agents to do the pinging for them and screen scraping and coming back with with appropriate sort of answers. Jeremy, your opinions?
Really good point, actually, Randy. But I think this analogy with, the back in the railway days, parallel lines being built, and there was sort of mass redundancy there. Don't know. Sorry, I wish I had something clever to add to say actually, but I agree. It feels like there's excessive capex, maybe because maybe there might be some government money behind this, because it sounds good, doesn't it? Oh my God, another data center, another power center, another GPU center, because it's headline grabbing actually. But sorry, don't know. I wish I could say
What
something.
about Jeremy? Well, tell us about the UK. Supposedly, there's was it this handshake with President Trump and Jensen Wong and Keir Starmer to deploy. Was it 500 billion or what was it? 5 million? What was the number? I can't remember.
Whatever the numbers.
Yeah, it's a large number.
I think the Nvidia actually they're becoming LPs in quite a few venture capital funds in the UK, so that's real. There's 2 billion going there. Energy is very expensive in the UK, by the way, so I don't know what the rationale is for building data centers in the UK, because it is very expensive around here. So that's more a political thing. From a political perspective, I guess it makes sense, because it's bridging to mainland Europe. So I can see the argument for that one actually. But once again, don't know. I think there's multiple factors here, political too actually, and geography.
I don't think data centers use many people relative to their size. They take up a lot of land.
It's land and energy, isn't it? That's right.
Yeah. Yes, exactly. All right, let's see. Let's look at the chit chat. Let's see, Anastasia, you can choose one you like, or we'll have a look. It's okay. Well, let's talk about crypto. Crypto a hedge against inflation. I know in the UK, I mean the equities company, there's some equity like MicroStrategy in the US. I guess it's valued at, it's really just buys crypto, it doesn't actually do anything. It just buys Bitcoin, and it's valued at twice the price of Bitcoin. And in the UK, it's even worse. Quite unquote worse. There's companies that are valued at 10, 15 times. It used to be 100 times even their underlying Bitcoin. Why is it that no, is this part of the driver of equities that people are getting gains in crypto and then they're using those gains to buy regular equities? And will that ever stop? Is this a macro trend that crypto is here to stay and will be trusting stable coins more than real cash? Stable coins are cryptos that are hedged to a currency instrument. Jeremy, you think about these things.
Big crypto fan. But by the way, we're co-running 6 crypto funds around the world now with AlgoDynamix. A big crypto fan. Just on the monetary side, actually, depending on which country, it's not particularly a monetary sort of instrument. Most of the cryptos are deflationary, not inflationary. So it's worth keeping in mind. It's quite the opposite of traditional finance, actually, the way they're structured and the way they're mined. So it's all, is it a hedge? Possibly. I think there's an argument to be said for the hedge. You mentioned that one, and I can go a long time, Ronjon, so interrupt me. Very bullish too about the stable coins you mentioned. So it's a combination of traditional currencies such as dollars, and then if put it on the blockchain essentially. Particularly exciting for emerging markets where not every country has a functioning central bank, not every country has a functioning currency. So this might come as a shock to many people on the call here, but don't assume that central banks and working currencies are given. I think half the world probably doesn't have a stable currency actually. So once again, Ronjon, very bullish. Bullish because of the use cases, bullish because of the tech plays, bullish because of the deflationary nature of the crypto. So these are my 3 plus points. In terms of valuations and everything else, well, if you subscribe to these 3 bullish points, Ronjon, you can make a case that it's not going to go away, and it has potential. So is it overvalued? I don't know. Is it real? I would argue yes. They're my sort of.
Why would you buy a stable coin that maps exactly to the US dollar instead of just getting US dollars?
Well, once again, Ronjon, we're luxurious position that we can just go to any bank and we can buy physical dollars. That's not the case everywhere, obviously. I think there's foreign exchange restrictions in quite a few countries. There's other types, even South Africa, of all places. I think there's limits in what you can transfer in fiat. So China, it's okay for us. Yeah.
China's limited to 250K, I think.
250K. Nigeria too. I think they tried to ban it, but stable coins. That's it. It's
So stable
decentralized,
coins
right?
is used for criminal, at least tax evading or foreign exchange evading activity.
Well, so is a suitcase full of $100 bill, Ronjon. I mean, let's not have an argument. So,
Frank, your opinions on stable coins and cryptos, is that one of the things that's keeping these markets up and people able to get money out of China more than 250K, for example, and use it to buy equities in the regular stock market would be one idea. What's your opinion?
One fiat currency is just like another fiat currency, whether you call it a stable value crypto or I mean, it's worth nothing. Um, Governments, however, China wants their currency, the yuan, to be used uh, instead of the dollar. Uh, does that have anything to do with stable coin? I don't think so in China. Jeremy, is China
different
coming up
model.
with
I'm
a
I'm not
stable
following.
value?
I'm not following too much, Frank. But I think every country is dreaming of having a global reserve currency, but realistically, there's only one reserve currency, and it's the US dollar.
Yeah,
Let's be clear about
I
this,
don't
right?
see
Mm.
anything to replace the dollar
I,
yet.
I don't think. Likewise, Frank.
But
Likewise.
what
Yeah.
about if with this the fall of empires, right? So it doesn't even have to be the fall of empires. It's just a declining population. In the last 50 years, we've been worried about overpopulation. The next 50 years, we're going to be worried about underpopulation. Pretty much every developed country is seeing their population decline. And so, in fact, they'll actually have to have immigration to do work, which is contrary to a lot of these autocrats around the world. But if we just have less people in the world,
But that's good. I mean, we need fewer people. With AI, we're going to need fewer people to be dependent on the government.
could we be extinct? I mean, this is South Korea's got a replacement rate of 0.75. That means in one generation they'll go from 60 million to 25 million people, and in two generations they'll go to 10 million people. So China will be down to 600 million people by the end of the century. Um, okay, Zishwan's got a question, comment. Go ahead.
Yeah, or like interesting to hear from all of you. So the token or stable token can actually be used in a smart contract, just collecting fees, or we call tax. Will IRS eventually just deploy that? So all the tax will just be collected automatically, and they're in so much favor of it.
Well, that's VAT, but not automatic, right? That'd be depending whether it's on taxed on income or taxed on your products that you buy. Um, and it goes back and forth, right? Some countries have zero sales tax but high income tax, and vice versa. Uh, so there could be an automation system, though, right? That is, you're paid in stable coins, and the government takes maybe they run it. They have their own stable coin. They have their own stable coin, and then they collect gas fees and collect taxes automatically.
Yeah.
So, right, we've got 4 minutes. Okay, let's talk about, are we in a market or a mania? Who wants to go first? Jeremy.
Market.
Market. Oh, go comments.
I might change from 3 to 6 months now, but with my opening statement, with my opening gambit, unfortunately the S&P is flat in what I call in global. So not
That's
expecting
very
anything.
important comment. I think
Yeah.
very, very instructive comment. So it makes me think a little bit not as inflationary as we might have thought. Frank, market or mania? Are we in a market
It's
or a
mania.
mania?
It's meme mania. Memes. There are so many what the kids are doing now with their cell phones and interpreting memes that they put up there. I don't understand it, but no, I think that the market's crazy, and most of the people in it don't know what they're doing.
Maybe people
But
in
you are in equities, Frank. You told us you're 20%
Little
back
bit.
in equities, so that's
I am
interesting.
back in equities.
Back in equities, yeah.
Yes, in Southeast Asia.
And then maybe people in the audience, they can type market or mania, so we'll see what they think. And then I think we're in a market too, so we're in a market as well. So and I think actually the comment about that's an instructive comment that by world standards we're flat, so we're not actually high. But it looks like we're high, but we're hidden. But we're seeing prices in the grocery store increase. Restaurants ridiculously expensive now in the States. It makes you want to eat at home and cook at home. And it would be like we've seen a few people writing market. No manias yet. Okay, so that will conclude our 1 hour on the state of the markets and be able to see what happens. We have lots of events, and maybe Anastasia can follow up, remind people what we've got in the next couple of weeks.
Yeah, well, I'll send everything as well, but we have the R42 university courses. Maybe Zishan can send the link. No, and yeah, we have lots of courses in October. And then then we have the symposium in January, and then also the retreat in January in the Bay Area. Oh, also, if you're here for SF Tech Week, we have two R42 events. We have a yoga on the 8th of October in the morning in San Francisco, and then on the 9th we have the R42 day in Palo Alto. So again, we'll follow up with everything. So hope to see you there if you're there.
And on the 11th, it's the brain optimization summit with our portfolio company, NeuroAge. So that will be there as well. And we also have following that longevity series. We'll send all the links in an email so you'll have it, and you'll be able to get see if anything's interesting. Okay, great. Okay, thank you very much. Yes, we'll get a recording out, and we'll hopefully people have learned something. So stay focused and look after your cash.
Love it.
Right.
Thank you.